captain. Prakash Diwan is with us in the studios. Prakash, great to have you on the show as always. So the news is out. I mean, these stocks have run up, what, 40-45% since the announcements came through in May. You've looked at the share swap ratios, and barring, I think, State Bank of Mysore, where going by today's closing prices, slight sort of mismatch there. What reaction do you expect tomorrow?
I think overall it will be positive for SBI because it all converges in terms of benefiting SBI in a much better way than what we had started to get worried about. Essentially, State Bank of Travancore has the maximum benefit of sorts. Right now it's about 8%, on a math basis. But then, in the opening session itself, these will realign.
They probably adjust.
They'll adjust and it will probably equate. But what it does to the SBI balance sheet is it starts seeing a swelling up of the balance sheet in a much faster way, much more. Of course, this thing is going to take about 9 months easily. The ambitious target of March seems, quite challenging. But given the kind of push that the government has as the largest owner of most of these banks, that they would want to kind of get this consolidation done, it's quite possible. It's difficult, but it's definitely possible. So SBI gains a lot by virtue of a bigger balance sheet. It has a lot of duplication that it can start avoiding.
But let me quickly ask you this. As this amalgamation gets underway, and the management has admitted that September is also going to be a challenging quarter for the babies with respect to asset quality.
Yeah.
And Travancore is already at 9.5% gross NPA. Some of the others are at around 6.5%.
Yeah.
So what I'm trying to ask is the run, the whole merger play, is that over and done and dusted, or is there more, whether on State Bank of India or on the associates, till this officially happens?
No, I think once the ratios are out, you would start being able to put a value to each of the impact cost of each of the NPLs into the parent balance sheet. So I think by tomorrow, everybody would have a very clear idea of where things stand in terms of, translating the non-performing assets into the bigger thing. But remember one thing, the slippages that some of these babies would continue to have in this quarter are the additional burden that SBI would have to kind of live with. But SBI has kind of started, one of the reasons why this has been announced out of the blue of sorts, we were expecting it slightly down the line in terms of the third quarter, maybe early third quarter. This has happened because SBI has probably turned the corner in terms of, its slippages itself, as you could make out from the numbers. So
would you buy SBI now with this news, and plus, of course, its own cleaning up act and how it's played out?
I would buy SBI definitely because it probably becomes a proxy to the recovery in the bank segment. But the move that it has had after the results, it's been fairly spectacular, and probably you would start feeling it's slightly expensive. I would look at some of the smaller banks like Canara Bank and all, which would now start participating in this rally, this corrective mode of sorts. But SBI definitely has a huge overhang that's kind of out of its way, or almost out of its way.
Okay, great.